The balance of probabilities is that we made the low last year, we retested the low this year, and I think the low is in. But who the hell really knows, right? So, I got the back end of last year wrong like everybody else. I thought, we were going to get this run and we didn't see it. I think we've thrown a war, 8.5% inflation, the Fed raising interest rates, all at crypto. We've thrown Chinese ban. We've thrown so much at it and it didn't make a new low. Kind of usually that's a signal that the market kind of has found its bottom. And so now we're looking for, okay, what are the upside catalysts? The upside catalyst would be if economic growth starts slowing. We're likely to see then long duration assets, things that tend to outperform in low growth environments. And crypto tends to do very well in that kind of environment, much like Cathie Wood's ARK does, those kind of, longer term assets. So that's what we're looking for as the spark, I think, is a change in structure so people fear inflation less and start fearing growth more. The market is much larger than it was and Bitcoin is not as dominant. So at the margin, the 4-year cycle will have an impact, but not as large an impact. For example, the ETH 2.0 thing is going to create a potential dynamic that's different. So I think the cycles have changed. And I think, over time, these very volatile trends get less volatile. And we saw that with Amazon in its early days. It was like up and down 95%, then 65%, and then it just gets less and less and less because more people are in the network. So it's the same with crypto now. There's 600 million people, 300 million people using it now. So what's happening is the volatility dampens. So, I think the new down 85% is the new down 50. Is the down 50 where we are now. So it's kind of like we've had a bear market. We've been in a bear market for a year. Could it go down 65%? Possibly. But, it's unlikely to go down 85%. People have a very recency bias and they only know what they know. And people who've been in the Bitcoin market have only been around, a network adoption model for a decade. So they've only seen a few cycles. But if you go to Facebook, Amazon, Google, they've all had these for decades, and you can see how they work, and they tend to lower volatility over time. Using Bitcoin as a payment rail, now whether it's for, I don't think it massively helps the Bitcoin network because the use of slots on the blockchain is relatively limited in how Lightning works, but it allows it to use to create faster payment rails for certain things. Because look, let's face it, most people, the purpose of Bitcoin is not to buy your goods, or certainly not now. Maybe in 20 or 30 years' time, the purpose of Bitcoin right now is to hold it and as a store of value. And the last thing you want to do is buy something, some everyday grocery on it, because it doesn't make sense because the expected future return is so high. So, but using blockchain rails and Bitcoin rails to power a payment system, I think is great. And it's a fantastic development. And the work that Jack is doing on all of this is fantastic news. But I don't think it only at the margin drives active addresses or value exchange, which are the two things that drive the value of Bitcoin itself. The entire Web3 world currently transacts on Ethereum. Everything's priced in Ethereum. Everything in the metaverse is priced in Ethereum. Does that mean that stays that way? Who the hell knows? I'm no Ethereum maximalist. I don't know. But right now, that's where it is. Every NFT is basically priced in Ethereum. Some are now being priced in Solana. So we don't really know. I don't think the dollar goes away for a long, long time. The dollar is so deeply entrenched. It is the largest network of anything on earth, pretty much. And that's hard to get rid of. But at the margin, does crypto take over more of the payment system in this digital world? For sure. And different things. I think one of the best examples of the use of Bitcoin, for example, has been what Terra has done, using it as collateral. I always said it's fantastic collateral. It's actually not great for payments. The Lightning Network can solve different things of that, but really as collateral, it's fantastic. And that's what Terra have done. It's a great idea. And that we will see more of that. This is only the start of, I think, people using Bitcoin as the collateral layer. Also, we'll see, as opposed to central banks using it, we'll definitely see sovereign wealth funds owning Bitcoin because it's a long duration savings asset. So it works perfectly for them. So those, I think, are the bigger developments that will develop for the Bitcoin ecosystem over time. In terms of payments, we don't really know yet. Stable coins, I think, are still in their infancy. So that's the dollar winning out still, because stable coins are dollars. But for a pure Web3 world, we've seen that ETH is currently the king of that. We don't care. If I'm sending you £1 or $1, we don't care what network it goes on. Whether it goes on some Ethereum layer 2 or a Bitcoin layer 2, we don't really care. So I think we'll be sending money, whatever money, over all sorts of different networks. And the more interoperable this world gets, the more we don't care. You just want your money sent to you immediately. So we're not, Stripe's not really about sending Bitcoin around. It's about sending dollars using blockchain rails, so it's much quicker, dollars or euros or pounds. Same as BottlePay do as well. That's now owned by NYDIG. So I think that's good. And I don't think it's not a competition amongst blockchains. I think different people can offer different solutions. It's essentially creating like a stablecoin element of being able to move money around fast. And that's great. They're confusing what Bitcoin is and trying to impose that onto something else. It's like saying, well, the dog doesn't look like a cat and it doesn't purr, therefore it's a useless cat. Yeah, well, it's a dog. It's as simple as that. Ethereum is just not the store of value. Now, Ethereum maxis will say, well, it's going to be this ultra hard currency. I don't really care. Bitcoin is a better solution for that because of its further decentralization and security of the network. So it does a perfect job. Ethereum is not trying to be that. Ethereum is trying to be the open internet, the Web3, the new layer. So again, I think they interact together, and I think Bitcoin is this collateral base layer. Right now, it's not being used as collateral, and ETH is being used as collateral, but ETH has been used as a lot of collateral for all of DeFi, and ETH staking does that. But that's and Solana is just a faster, cheaper version of Ethereum, and it's less decentralized. So that's a trade-off, and that's okay too. And I don't go, oh my God, Solana, why should that exist? It's ridiculous. It exists because people want cheaper and faster, and they don't care about the maximum decentralization. Bitcoin people care about the maximum decentralization. Monero people care about the privacy. They're all different use cases. They're all just different technologies for different things, and that's okay. I just don't see why there's an argument over, well, why can't Ethereum's not Bitcoin? No, it was never supposed to be.